Well, greetings, my beloved clients and friends. We are in a very volatile market right now. On Wednesday, after the market closed, Trump announced, it was April 2nd, which he called Liberation Day, and Trump announced his tariff plan. And it was very aggressive. He'd been saying he was going to do it, and he did it, and he did it in a bigger way than a lot of people expected. And it had a huge negative impact on the markets. On Thursday, the markets were way down, and then on Friday again. And it's looking like
Did you see a key by chance? No.
they are going to open sharply down on Monday morning. Okay, so I imagine my clients want to hear from me. So I'm doing this video to let you know what we think, what we're doing about it. So where do I start? Let's talk about Trump 2.0. MAGA 2.0, if you will. His first term, MAGA was kind of a lot. The spokesman could have been, Marjorie Taylor Greene or Lauren Boebert. And Trump 2.0 took a different approach, and he got around him a lot of businessmen that had been very successful in business and finance, and a lot of billionaires or multimillionaires that had been successful in business. And I believe that they took one look at the finances of the government, and they said, this needs to be fixed, but it seems like there's a way for it to be fixed. One of the big problems was the amount of debt on the balance sheet, and the fact that debt was coming due, and rates are very high right now. Rates have been low since 2008, since the financial crisis, under 3, and at times close to 0. And the opportunity was there to finance that debt at a very long term, at a very low interest rate, and I think Trump tried to do it his first term, but he got shot down, and Biden financed that debt for short terms at high rates. So that debt, which had been at very low interest rates, was now, as rates have gone up, and they wouldn't lock it in over a long time, was at high interest rates. And high interest rates not only hurt the government, who has a lot of debt, but businesses who have debt and individuals who have debt. Real estate investors use a lot of debt. So if he could get interest rates down, it could really help the balance sheet of the government, but also a lot of businesses and individuals. And Powell has started to lower interest rates from where he had taken them way up to over 5.25, and he brought them down at the end of last year. He did a half, a quarter, so he brought it down 1%. But it was still in the range of 4.25 to 4.5. That's the overnight rate. The long-term rate, which is like the 10-year, at the same time that Powell lowered rates, the 10-year went from like about 3.5 to over 4.5, almost 4.8. And then since the beginning of the year, that rate has started to come down. And I think Trump wants to get that rate down. Powell doesn't control the 10-year rate. He only controls the overnight rate. So how would you get the interest rates down? You have to, because the market sets the 10-year. So, and it's based on like inflation and economic growth. So one way to bring it down is to have some type of recession that would motivate Powell to lower the short-term rates and motivate the market to seek safety, which would bring down the long-term rates. Okay, now Reagan did this when he came into office. He was elected in 1980, so he came into office in January of 1981. And the very first thing he did, with the help of Fed Chair Paul Volcker, was push the economy deliberately into a recession to break inflation. And it was a very painful 81. And then, but it ushered in a 20-year period of incredible economic growth. So I believe that Trump might be doing something similar, is to create a shock that will bring rates down so that they could refinance the debt at a lower rate, and which would be beneficial to the government, to business, and to individuals. But there would be some pain involved. He has, and I think the businessmen that he has as his advisors have a vision of what needs to be done and what can be done. Part of it is dealing with global trade agreements, and they have been, the United States has been very generous in not charging tariffs to other countries while they're charging tariffs to us. Kind of in a way to help those governments. For example, when Japan came out of World War II and Germany, in a way we subsidized their reconstruction by allowing them to charge tariffs on us and us not charging tariffs to them. So that reconstruction is done. They should get rid of those type of tariffs. So I believe that the people that he has in charge are very capable and have a plan. But they're businessmen. Okay, there's a saying in Silicon Valley: move fast and break things. Okay, and businessmen, especially the people that he has that have been very successful, one of the reasons that they have been successful is not only their understanding of business and their talent and skill and abilities, but also because they're risk takers. Okay, so, and they're not politicians, so they're comfortable with a much higher appetite of risk than most people. And it reminds me of incident that I experienced. One of my hobbies has been for many years paragliding. I don't do as much as I used to do, like in my 30s, but it's something that I like doing, paragliding. And some people would consider that risky, running off the edge of a mountain with this little floppy thing behind you, and it holds you up and takes you up, right? And my wife wanted to do it. She goes, "Oh, that looks like so much fun. I want to try it." And I said, "Well, okay, you want to take lessons, or I could teach you how to do it." And she's like, "No, I just want someone to take me up. I don't want to invest that much of my time and stuff." to do it as much as you do. I just want someone to take me up and see what it's like. So I had a buddy named Mitch, and he was what we call a sky god. This guy was a legend. He actually had the world record for the most loops most consecutive loops in a hang glider, right? He was a great pilot, and I trusted him completely with my wife. But he wasn't in the business of taking people up on weekends for flights, because there's some guys that do that. They charge people to take them up for a flight, and it's kind of a business to them. That wasn't Mitch. He just loved flying, and he was very good at it, and he had a tandem glider, and so I said, hey Mitch, would you take my wife up? She wants to experience paragliding. He's like, yeah, sure, no problem. And so he takes her up, and in his mind, he's taking it easy because he has someone with him that has never experienced it before. And he's flying with her, and a thermal comes by, and he goes, hey, there's a thermal right here. Let's take it up. So he starts circling in this thermal, getting height, and he's spinning around. And as you spin, you kind of start pulling a little bit more G's as you're spinning up. And so he's just going up, and he thinks he's doing a great job because he's taking her up and he's letting her get the full experience of paragliding. Meanwhile, she's underneath him, turning different colors, and she actually throws up. And because they're circling, she throws up, and it ends up coming back and hitting him. And so he takes that as a hint that maybe he needs to tone it down a little bit more. And so they conclude the flight, and she was exhilarated and also apologetic when she landed. I'm sorry I threw up on you, but I had a great time. And the reason I say that is because Mitch felt like he was doing a very tame, calm flight with this first-time passenger. But to her, she was turning all different colors and throwing up because they have a different risk appetite, right? And so I think the people running the government, they have a plan, and in the end, it's a little bit of it's a risky plan, but if it works, it could put the United States in a great position for a long period of time. And they, because of their background, being businessmen and not politicians, they're comfortable taking that risk. But they're not used to the fact that they're taking the rest of the country along with them on this ride. And so we're underneath them, turning different colors and throwing up. And they're feeling very comfortable with where they're at in this negotiation, in this process, in this first step of their plan. And they're very comfortable taking the market down 20% temporarily to get what they want. And I need to be conscious that my clients might not have that same appetite for risk, and we need to tone down our experience of what is going on. But I think, in my opinion, I still believe that over the next 3 to 5 years, we should be in a really good position. But like I've been telling my clients from the beginning of the year, put on your seatbelts, because this year could be a little bit rocky, it'd be a little bit choppy. And shoot, that's been an understatement. So we are going to take advantage of this market to, we're going to take our exposure to stocks down, and we're going to take this opportunity to buy some companies that I've really wanted to buy, but they've been expensive. We're going to take profits on some other ones that are just fundamentally more volatile, and we're going to add some positions that are less volatile, and we're going to lower our overall exposure, raise cash, because I think there will be an opportunity to redeploy that cash at attractive prices. But in the meantime, we want to stabilize the portfolio a little bit. We're not running for the hills, but we are taking a step back and repositioning. Costco is an example of a company that I wanted to buy for a long time, but it was just too expensive. And, now I think we're able to get it at a pretty good price. UPS, I thought we got it at a great price, and I think we can get more at even a better price. And there's some others. I don't want to, show my hand completely, but that's the strategy that we're taking. So you'll see some adjustments. We're limiting our exposure, but we're also taking an opportunity to get in some names that we wanted to, and we're taking some profits on some that have been more volatile, and they've actually come off their highs, especially in the last 4 to 6 weeks. So unfortunately, we're not selling them at their highs, but we're not selling them at their lows either from when we bought them. So we want to be careful about the tax implications, but especially for IRA customers where there is no tax implication, we'll be a little bit more aggressive. The tax ones will be a little bit more tax sensitive, the taxable accounts. But so that's where we are. So like I said, put on your seatbelt. It's going to get choppy. We're keeping an eye on what's going on, and we're making a few changes. We're trimming some positions. Overall, our exposure to stocks will be lower, but we are taking advantage of this to buy some names, like I said, that we wanted to get into, and we'll keep our finger on the pulse. I don't like to be too reactive, but I think this is an opportunity to make some changes and clean up the portfolio a little bit. So that's what we're doing. Feel free to reach out, because I know the news is kind of scary right now, and I do not believe April 2nd was the beginning of the end of the American empire. I mean, I don't think history will say, oh, that was the day that America died. I just don't think that's the case. I think fundamentally American, and I've been wanting to do this video, but the volatility of the market made me push it back, about why I like investing in America. I think I'll do it later this week, but even what the things that are happening, I don't think it makes me completely change my mind on that. Like, oh, America's over, let's start investing in some other country because America's done. And I will do that video, because I think the reasons that America has been successful for a couple centuries are some fundamental things that, even with what's going on right now, those don't change. So I hope that helps. I know I rambled a little bit. I have a lot of thoughts, and how do I organize those to get those out to you? So I hope I made some sense, and I hope it assures you in some way that we're watching what's going on, and obviously every move we make won't be perfect, but we're doing the best we can to manage through this situation. And I believe over time it'll just be like any other situation that we've had to manage through and come out pretty good on the other end. It's not the first time we've seen volatility. I mean, we had 22 was very volatile, COVID, 2018, 2008, 2001 and 2, 1995, 1998. there've been a lot of bumpiness that we've been through, and we've come through it, and I believe that's the same case with this one. All right, so we'll be in touch. Feel free to reach out. Have a great day.